Welcome to my daily review. Today is Thursday, July 10th, and you're looking at a daily chart of the Nasdaq, which advanced 19 points today, or 0.09%, and closed at 20,630. You can see we're just in a strong uptrend, but I would have to say, overall today was not a good day. Even though the index was up, a lot of our leading stocks got cracked pretty good. And it's just the rotation in the market. And I'm going to talk about rotation at the end of the video if you're interested, because there's a reason why this rotation is going on. And people ask me, like, why do you say it's a healthy thing, the rotation? And I'm going to talk about that at the end of the video. First, I'm going to go through some earnings, and I'm going to go through some themes of some leading stocks and leading groups. And then I'll get to our rotation and some stocks that are selling off here. As I mentioned, the NASDAQ was up today and it's 7.1% above the 50. Close at 20,630. But the interesting thing here to me was that the QQQ was negative for today, 80 cents, 0.14%, not a big deal. But you would think with the NASDAQ up, this would be up, especially when we saw our, NVIDIA trading. Everybody's talking about NVIDIA. It's a 4 trillion market cap, and that's good for cocktail information. But not much else. Yeah, the largest stock in the market, making new highs. You'd think that that would be bullish for everything else. We had Tesla moving higher today. It's still in a choppy trading range, but it was up 4.7% today. And we saw another large company, Apple, was up today. So you'd think that the indexes, would be up and the QQQs would be up, but I mentioned they were down. And the reason why is because there was a lot of stocks, which I alluded to earlier, is that Netflix got hammered, and I'll get there in a minute. I got to move on. I'm not going to do this SPY and all the other stocks today, indexes today, excuse me, because I want to talk about stocks. But I did want to point out that even though the Nasdaq was higher, there was a lot of stocks, a lot of weakness underneath the surface. It doesn't mean anything. It's just a rotation. It doesn't nothing sinister. It's just a rotation underneath the surface, and everything's fine. And the index is grinding higher. But this is why I say I trade stocks. I don't trade indexes. And for me, it was a pretty, not a very good day because of the growth stocks that sold off hard. Anyway, I want to get to what I think is really important. We finally, it's been 3 or 4 weeks since we've had some really, earnings to dig into. We hear about tariffs all the time, and we hear about, the interest rates and Powell, he needs to be fired. And today we heard about earnings, and earnings really, drove this entire group higher, not only the airline stocks, but some of the rental cars and the hotels and the booking. I mean, this, you could tell the market's starving for some earnings data, and we're starting to get it here. Delta Airlines reported, better than expected, not blowout numbers by any means, but they gave a pretty gloomy forecast. What was it, back in April? When the tariffs were, totally in vogue at the time. And so, yeah, they give a, conservative forecast, and they get today, we hear a better than expected report. And Delta Airlines was up 12% on that news. And other airline stock, this is what I call pen action. American was up even more than Delta. It was up 13% on that news. And even let's go to Alaska Airlines, popping 9%. And the one that I like to make fun of is Southwest. This one actually broke out of a base. Elliott Management got involved with Southwest, and they're actually doing better. You can see here on the weekly this little stage one, and if they wants to break out of a stage one base, I'm all for that. Uh, Transportation airlines, heck, I mean the group is not very strong. You can see a lot of these charts they've been selling off, but making a move today. Why? Well, because of earnings. I know that liquidity drives the market, but in order to have a sustained rally for years and years and years and years, you have to deliver earnings. If you want your stock to look like this for 25 years, you need to deliver earnings quarter after quarter, year after year. And it was the airline stocks here, the Alaska. I don't think I got to United. American was up. Wow, United was up 14%. So there was a lot of pen action from the Delta earnings report. I got to go to, the number two company, Avis. They try harder, up 6.5%. This thing's making new highs. It's been on our relative strength list every morning for a long, long time. And then Hertz is another one of these rental car groups, popped, 12%. So just one earnings data. This tells you how starved the market is for some new data. And we're going to start to finally get some here, starting in earnest next week. And it's going to be, I think the bar is pretty low, and I think it's going to be well received. But every earnings season, you're going to have winners and you're going to have losers, guaranteed. There's going to be some losers getting dragged during earnings season, and then you're going to see those ones popping higher, 10, 20, 30%. And those are the ones that I pay attention to. Some of the hotels, I saw Hilton was up today. Nice move, making new highs. I didn't look at Marriott's, but yeah, these are looking good here. That's cup with handle moving higher. That looks very good too. So yeah, so one earnings report helped the airlines. It helped the I believe it was even the booking stocks were doing okay. It's up $50, not bad, almost 1%. The hotels, the rental cars, just on one airline report. So yeah, looking forward to uh, the reports here from. You know what else it did? Gosh, the cruise lines. Man, these things popped on just this one airline report. This is Royal Caribbean, and then we have Carnival Cruise Lines. We saw Norwegian Cruise Lines was up. I saw that one. This one's just forming a base here. Viking, I saw that one was up as well. Yeah, look at Viking, man. This is yeah, making new highs. So yeah, just one report and all these, and this is part of the rotation too. But the market's looking for something other than tariffs and interest rates. They want earnings, and we're going to get them. And I cannot wait myself. Anyway, I said I had the longest video I ever made last night. Tonight's going to be one of my shortest. I got to move on. There was news this morning, materials, MP materials, they have kind of a monopoly. This one popped at the open, had a nice day. There's your pop. Yeah, very nice for MP materials. They had a Department of Defense contract. And another one, this is a coal stock. Yeah, end up 30%. Yeah, we'll take that. We're shoveling coal. What else did I see? Oh, Tex, TEX, Terex, another machine mining company breaking out of this base here at 49, popped, 4.5%. So just looking around, observing some of these other names. Yesterday, I talked about, part of the rotation earlier in the week. We saw the oil and gas stocks getting some love. And then we saw the drug stocks and the home builders today. You saw the airlines, some of the hotels, and the rotation is healthy. And I just got to go back to the home builders here. Is if you're into, I shouldn't say bottom fishing because these are quality stocks. They just have sold off, and they just go through cycles, right? Stages, if you will. And here's your stage, and you got your stage one, and you got your stage two, your advanced, and then your stage three, kind of a flat stage where it doesn't appreciate anymore. Then you got your stage four, and now we're going through our, stage one again, and maybe we'll have a stage two here, like we had before in 23. Maybe we'll get something going here for our home builder, DR Horton. A lot of these are looking the same. Pulte Homes. That one poked above its 40-week line or the 200-day line today. Pulte, one of the stronger names. KB, one of the lower end homes, doing better, but just trying to make a bottom. And then Toll Brother, the high end home builder, looking good. And then Greenback, kind of a niche player in the South, Dallas and Atlanta. And this one popped above the 200. I mentioned it yesterday. And these things look good. And if you just want to buy a basket of them, I guess you can go to the Nail, the home builder, select home construction index. I prefer to own stocks, but if you want to just don't have to worry about earnings, you just want to buy a basket of them, Nail, I guess, would be the one to buy. Anyway, I got to move on. There's a lot of groups. I mentioned earnings today, and we got something from this electrical power equipment company, and the market liked it, right? That 99 area was an area of interest here. But you see 99.49, 97, and then it popped above it. Kind of flirted with it a couple times. And today just, plowed through it like a poop through a goose there, 106.29. So the earnings season is here, folks, and we're going to get some big movers. I'm excited about it. ENVX, NOVX, yeah, this one's made a nice move as well in the electrical power equipment group. This one's just, forming a base or the stage one base, but looking pretty decent, up 24% this week. We'll take that. And then Gates, this is another one in this group, electrical power equipment group, looking pretty darn good. This one breaking out of this cup with handle pattern. And the one that I had on the list, of course, pulled back to its 50 today and was down nearly 6% on the Amazon news. I think that's an opportunity, honestly. I don't mean to sound like a perma bull or anything, but that news was not really going to impact Vertiv. We'll just see when they report earnings are on the 23rd, which is what today's the 10th. Yeah, less than 2 weeks away. So, I can wait. If you bought that one, you obviously, probably sold it here on, if you're down 6% in the day, that kind of sucks. But all it did was pull back to its 50. So, if you were not in it, this is the thing where if you're not in it and it pulls back to the 50, you're going, yippee-ki-yay, this is my chance. It hasn't been back to the 50 since, April. And if you are in it, you're going, oh, this stinks, man. I'm down 6% today. So it's just all about perspective. Or if you're in it halfway or a quarter position, you might want to add another position here as it pulls back. It just depends on your strategy. I like this stock, but I didn't expect it to pull back to what did it pull back to like 115 today? Yeah, 110. My goodness. If you got it at 110, yippee-ki-yay, I think that's a good price. All right. Let me see. I'm going to move on from that group. Electrical power. Oh, I've got to go to the retail because I'm looking at our relative strength list in the morning. A lot of these retail stocks are popping up, and I'm really surprised because retail, the economy's slowing. You'd think that retail wouldn't be that great, but Boot Barn makes all their stuff in the United States, and maybe that's a factor. It's tariff proof or whatever. But man, this one's on a heater. Boot Barn, one of these low float, 30 million shares in the floats, is nothing, right? 5 billion market cap. You could see here this nice, pattern here. V-shaped pattern, then went sideways for 5 or 6 weeks and now busting out of that base. Yeah, Boot Barn looks pretty decent. Then I mentioned TPR is the coach Kate Spade. Another new high today. I mean, I'm just kind of observing here in this retail group and getting to some of our our stronger names here that are showing up on our relative strength list is Cracker Barrel. And I'm kind of not understanding this whole food thing because Cracker Barrel's ripping, making new highs. The Cheesecake Factory, and what was the other one? Brinker, still doing pretty well. Cup with handle, having a shake out here. But then you get something like Bros, which has got the growth, and they're just selling Bros. The Wall Street's not buying whatever Bros is percolating here, not buying that coffee. To me, this is, if you look at longer term, I think this is a buying opportunity. There it is on the weekly, cup with handle. These guys are going to deliver the growth. Yeah. So anyway. I'm not so sure about those other ones, but I'm just pointing it out. Shake Shack, another one making new highs. This. Why is Shake Shack making new highs? And not Dollar Tree, Cheesecake and Cracker Barrel, and some of these ones, Shake Shack and Bros is getting just hammered. It doesn't make sense to me, but that's the market. All right, we had some news today in retail. Canada Goose Holdings is on the market for a private equity firm. I forgot the name of it. It doesn't matter. But anyway, Canada Goose up 4% on that news. And I did mention Dollar Tree, so I got to point out Dollar Tree is doing well, making new highs here. This one was in a real bad way for a long time, man. You talk about a stage four decline. I mean, that is a stage four. But then what happens? Like I said, they form a base, right? That's why, bottom fishers like to, buy here. And then what happened after, the springtime, the Liberation Day or whatever, is it 60, what was it, 61 was the low, and now it's at 108. So it pays the bottom fish on some of these companies. So it's not my style, but I'm not gonna, I don't, I'm open-minded to all styles, and if that's your style, more power to you. All right. I'm gonna move on. I went to the retail. Oh, the energy names. GEV, this is one of my larger holdings. This one's just surfing the moving average. And I know a lot of people say it's kind of boring, it's slow. And it's true. It's just kind of slowly surfing the five, up $3 today. Big deal for a $530 stock. But the other one that I like, and it's had a big year and it pulled back to the 21. I put this one on the ready list today because it had this like bull wedge pattern here. I think I put it on the ready list. I was expecting a bounce, and we got a bounce here at 10%. Whoa, close at 197. I didn't even, I think I got about 182. It pulled back sharply this morning. Yeah, right here. Yeah, in the morning. I said, it's going to start. This is why if you look at I don't think it's going to have it on the 1 minute chart. No, we're not going to get the 1 minute chart. Oh well, it doesn't matter. Yeah, it just pulled back, provided an opportunity, closed higher. But I just wanted to point out for this one, LEU, if you're one of these people who believe that stocks that go up 500% start by going up 200%. This one's up 200% already this year. Could it go up 300, 400? Sure, why not? Why not? Some of it's cohorts. I always say GEV is a leader, but if you look at appreciation, the Centris is lapping the field here. OKLO's had a good year. Same with SMR, and NNE to a lesser extent. Just in this group, a lot of winners. And my point is, we're halfway through the year and we just started the third quarter, and this one's up nearly 200%. I think it's worth taking a swing at it. I had it on a ready list today. I also had Vert on. So, you have winners and losers. That's just part of trading. And yeah, I think this one has the possibility of making big moves. It's got 67%, the sales growth that you look for. It's turning, yeah, profit. I don't know. I'm just taking a swing at it, and I got lucky today. So anyway, I don't want to talk about that. That's fine. That's enough for the energy group. I'm going to move on to crypto. Last time I looked, Bitcoin was over 113,000. So yeah, this thing is Coinbase is ripping. I put MicroStrategy on the ready list this morning, and this one, oh, it was down earlier. So yeah, it closed nicely. Let me see this. I think it was down. Yeah. I think it started off down, closed higher. And all we're interested in is the close. I had a lot of people this morning saying, "No, no, we're going down. I'm down, 2% today." Big deal. It's how the market closes, not how it opens. That's the institution showing their hand right here, right at the open. Well, we get retail folks going, "I'm scared, help me." And then, they come in and buy it up all day. And how does it close? Well, it closed higher. So that's, your institutions, they're showing their hand. They're buying this market. The dips are being bought. So anyway, I wanted to point that out as I digress from my cryptocurrency, Bitcoin 113. Here's Robinhood back at $100 again. If you got those calls, weekly calls, you cash those in. It was 100 on July 2. Now we're at July 10 and it's 98.76. We'll see if it could challenge that area once again. We'll see. I think it will. It might get the Patambo treatment. Speaking of which, I had a lab on our ready list this morning. I was just waiting for this thing to, crack 102 and show some strength and power. But it got the Matambo treatment again. And it's done this several times, really pissing some people off that are long this stock. There it is, 100 there. What date was that? May 29th. Wow. And then June 20th. And 3 weeks later, keeps bumping its head up against 100. Did it again yesterday. Today, drove above it, gave it the old okey doke, the old head fake. Yippee ki We're on the slide on the way down. This is just, I think it's just marking time. I like this, but it's got to show some power above 102 and hold that area. And today it didn't. But That doesn't mean it's not going to. It got a little extended above its five, right? At 103. That thing, yesterday was 6.5% above its five. So, just give it some time. If you own it, I think it's fine. If you want to buy it, which I do, I'm going to wait till it, closes above like 102. Not in a hurry. Picking my spots, waiting for my pitches here. I mentioned yesterday that you only need a couple of trades to make your year, so you don't have to be too over anxious, even though we're on a nice uptrend in the market. All right, I wanted to point out, I talked earlier about the Nasdaq was up, but we saw a lot of stocks selling off. Netflix was one of them, down 38 bucks. That's not fun. Spotify, down less than 2%, but still, below the 21. Yeah, this is not fun. CrowdStrike below the 21. This thing sold off 5%. Boo-hoo. Zscaler below 300 now. Wow. So CrowdStrike's below 500 and Zscaler's below 300. Yee. I don't think there's anything to worry about here. It's just kind of mechanical. Another one, Palo Alto Networks. Yeah, this one slices 50 down 7%. I mean, just not a good day for these cybersecurity names, Fortinet. This is on the head on the ready list. Of course, it goes down now, down to 100 bucks. Below the 50, so you can't buy it. Yeah, that thing's probably going to rally back through the 50. I mean, would you rather buy it at 105 or 100? I don't know. It just depends on your strategies. Um, oh, and then the one that I get a lot of questions about, a lot of people talk about Rubik. I don't know if it's me talking about it, people are just responding to me, or people are genuinely interested in this stock, and they should be because it's got a lot of growth and it had a big move. But folks, this thing is just, and I talk about it every day, it's forming a base, okay? That's what that's what you want it to do. Okay, after a big run from 47 to 103. This needs more time. It's not going anywhere anytime soon. I know people got excited yesterday. It was up 5%. Well, now today it comes back and it's down 5%. So it's just forming a base. It's not doing anything wrong. You got to look at weekly charts. And here to me, it's just, I don't know if that would be the bottom there. Last week's low of 83.51 could be, but you're looking at one, two, three, four. It's only been 5 weeks. So give it another 2 or 3 weeks, and I think we could look at, putting this one on the regular list. It's just too soon right now. Earnings aren't until September, so the long ways away. They reported, yeah, back in a month ago, so it's got a couple months to report, and just let it base, man. Don't expect to buy this thing. It's going to bounce off the 50 and make new highs. It's very, very unlikely to happen. So yeah, it's just forming a base. So you got to let these stocks form bases, and that's why we like to buy them, as they're coming out of a base and not sit through the base building process. It's just too arduous and tedious, and it takes too long, and there's just too many other names that are, worth buying. All right, a couple other names, that I own here. DoorDash. Yeah, down 3%. That's what, the market was up today, but all these leading stocks are being sold. What's going on? Dave had a hell of a run. This one's being sold down 6% today. Same with SEZL, had a big run. Below the 21 now, down 10% today. And that's what happens, when they get bought, they get bought, they get bought up, and then, profit taking and selling and reallocating assets. I just talked about the oil and gas stocks and the home builders and the drug stocks. The airline stocks today and the cruise lines, they're just rotating money around into other groups. Reddit, another stock that I like here, it just pulled back. It's 21 doing nothing wrong, but down I want to see how much it's down this week. Yeah, 9% this week. That's a rough week, but it's had, a big run off the lows. And Carvana, another one that's had a big move and just pulled back slightly today, 2%. But that's what I mean, that today was not a great day, just a lot of rotation. And the last thing I want to talk about is CoreWeave. I mentioned this a lot this week because they purchased CORZ in stock, all stock deal. And CORZ went down. It was a $9 billion deal, all in CoreWeave stock. And the market cap here just keeps cratering. Now it's 3.9. And so this is Wall Street telling you they don't think CoreWeave's stock is worth much. And that was the hint on Monday. And if you didn't catch the hint, I saw a lot of people yesterday say, "Oh, CoreWeave looks great," and I'm thinking, no, it doesn't. It should have bounced here, and it didn't, and it came back down. That's what I'm talking about when these stocks squat, squat on a moving average. This is what happens oftentimes, right? They got to bounce. You got to see that bounce off the moving average, like we saw with LEU. That's what you want to see is a pop, man. You don't want to see this CoreWeave here squatting and then whoop. But the deal is here with CoreWeave, and I know a lot of people are saying, "Oh, this is a high tight flag, and this is beautiful," and the eBay comparison. Well, that comparison's out the window. This thing's toast. Yeah, well, I wouldn't touch it. If I was going to be in this stock, it'd be on the short side, not the long side. But yeah, that's just what happens. I mean, it ran from 50 to 187. So yeah, just pulling back, and the market doesn't like it. It's been downgraded like 3 or 4 times this week. And I know the bulls are saying, oh, the institutions just want cheap shares. Well, the proof is in the pudding. Somebody's selling this thing. And yeah, I wouldn't touch cores either way. Cores or core weave, either one of these is completely avoid these two. And this is why I don't want to get involved ever with this M&A stuff. It just gets messy sometimes. And that's it. Thank you for watching at mcstockcharts.com. We never give up, except for none of the great Steve Jobs. I just have one more thing, and that's I'm talking about rotation. So we're going to stay hungry. We're going to stay foolish. We're going to stay humble in honor of the great Steve Jobs. We're also going to talk about rotation. And the rotation is, I've sat on steering committees for pensions for, schools, school districts, and some of these schools, we meet with the fund managers, quarterly or, twice a year, but, you have several different funds. So you're meeting with them every quarterly, just different ones. And they have, like a basket of 20 different groups and they have to be compliant within each group. Like there might be, an energy group, a technology group or an IT group within technology or yeah, IT infrastructure or telecom services within technology, semiconductors, obviously, or, there's retail groups, there's oil and gas groups, there's utilities, there's media, there's advertising, there's drugs. There's airlines. I mean, there's all sorts of different baskets which these companies have to fill. And usually within the group, like for instance, one of the groups that I sat on, there was we gave them like 20 different categories that they could buy stocks in. And, Apple was the big one that they wanted to own. So they'd buy Apple and a telecom company, a consumer products, four or five different categories. They'd fill it up with Apple, and you could only have they have to have at least 3% in each category and no more than 5%. So they'd put 5% in of Apple in one group and then put 5% of Apple in another group. And so they had overfilled the basket with Apple because they wanted to outperform. But I can tell you, sitting on these committees for years and years and years, and these pension funds are, they're you're talking about Stanford and Notre Dame and Harvard and Yale. These are hundreds of billions of dollars. And these companies have to be compliant. And usually there's like 65% stock, like 25% fixed income and 10% cash. And it's difficult to outperform with that structure because these pension funds don't want to take a lot of risk. That's why they have fixed income and cash. And a lot of the managers they underperform. Actually, they do not beat the S&P. I used to laugh at them, and they come in and make excuses, and I understand because when you're only 65% stocks, it's hard to outperform because fixed incomes doesn't do much for you, and obviously cash, you're just sitting in cash. So there's different formulas. Some were 70% stocks and 20% fixed income and 10% cash or whatever. It doesn't matter. My point is when one of those baskets like technology or semiconductors gets filled up past 5, 6, 7, 8%, and they would come in and say, yeah, we're 8%, out of compliance. And then, the committee would just say, well, the next time we meet, you be in compliance or else they can get fired. So they have to sell stocks that they love, like Apple. They would sell Apple and buy the bottom feeders that they had to buy. They didn't have enough in, like in the home builders, right? had to buy these, take money from one basket and put it in another basket. And it's just reallocating. And you see that a lot at the end of the quarter and the beginning of the quarter. And we're at the beginning of the quarter, we're seeing a lot of rotation, but that's healthy for the market overall because it's just reallocating funds and it's taking some money from your winners and is reallocating them because they get too big when they grow that much. I mean, if you if you have a fintech, basket with SEZL and Dave in there, and these things are just pumping like crazy, you're out of compliance. It doesn't take much, so you can't buy anymore because you get too too big in your basket, and you have to sell, to buy something else, buy a drug stock. We'll go to Merck. We got to go buy some Merck because, we're out of compliance. So that's just the way they kind of roll money around. And it's just a game, that they have to play. Otherwise, like I say, they get fired. And these schools and these committees, they change managers all the time. You get fired for not being in compliance. So that's part of the rotation deal. And it's not talked about very often. I don't hear anybody talking about it. It's a fact of life. I was on a steering committee for a Catholic thing that they wouldn't allow us to buy, beverage, spirits, booze. We couldn't buy booze, or we couldn't buy, like what's Smith and Wesson. I don't know what Smith and Wesson is anymore. Um, was it SWBI? Is that it? Smith and Wesson? Yeah. You couldn't buy, firearms in this certain one. So, we limited these guys, and so they were really, there was always the same ones, like because I would talk to the manager and say, "What do you like?" We like IBM, we love Apple, of course, and they kept gravitating towards, Salesforce and Microsoft, and they like the bigger companies, the large liquid companies, and they just have to rotate, and when they were out of compliance, they'd come in sheepishly and say, next quarter we'll be in compliance. We'll have to sell some of our Apple and buy, some Merck or whatever it is. Anyway, that's it for me today, except for I lie. I do have one more thing. After hours, we have another earnings report from Levi's, and it's up nearly 7.5% after hours. Yippee. So, earnings season is coming, and this is what gets my juices flowing. This is what moves stocks, these new data points. And I could tell you, Levi's here at 1969, which was a great year. The Mets won the World Series that year, the amazing Mets. And one of my favorite teams. They drafted me in 1976. But anyway, 1969 there. um, would be a buy point. It closed in 1973, which is another year the Mets went to the World Series. But after hours, Levi's is up to 21. So it's breaking out tomorrow. So another stock here breaking out, in the retail space. So I'm looking forward to that. And there's just going to be a lot of exciting reports, and I think companies that are being slept on. I mentioned Bros earlier. I think this one's being slept on for sure. Wall Street just not buying the story. TGTX was initiated at Goldman today. They gave them a 37 price target. It's right there at 37. I think that's going to be raised here. They're, they're going to report strong quarter. Anyway, I did say about three times now that that's it for me. Thank you for watching at mcstockcharts.com. We never give up.